Hi, this is Zak Mir, editor of Spreadbet Magazine. We'll look at some bulletin board hero stocks on Wednesday, the 3rd of December. I'm starting off with Central Rand Gold, where we've had a really wide-ranging day yesterday on Tuesday, and within this basically a flag formation. It's based at the 20-day moving average at 17.83 pence, and even though the action here is rather hairy, giving the benefit of the doubt to the upside argument, given the way that we have the RSI still well above neutral 50 at 56 and a possible uptrend line there. And also, we've just been treated to a golden cross buy signal between the 50-day and 200-day moving averages down there at 12.27 pence. So something to go for there. If you're cautious, maybe you'd wait for at least a clearance of the 10-day moving average, currently at 19.71 pence intraday, and that would take us back to obviously to the 25 pence resistance zone. Or obviously, if you're very cautious, you'd wait for this bull flag, this consolidation range to break before looking for a 40 plus target. This stage, really only a weekly close back below the 20-day line would be outright negative for Central Rand Gold. Next up is a stock which I identified over the weekend as a potential recovery situation on zaxta.com. There was a rather obscure line of support from earlier in the year, from March, running through the 60 pence level. That was also support actually at the beginning of November. So there was it wasn't totally out of the blue in terms of the recovery we've seen there, and also we've had effectively a bear trap from below the 50-day moving average at 64 pence. That's probably the line in the sand now in terms of regarding the shares as being a recovery situation. Ideally, we'd have a quick break of this difficult resistance zone just above 80 pence, the top of this triangle formation, over the next couple of sessions, and that would at least take us back towards the 200-day moving average at 87 pence. There's a sort of outside chance of a sort of sharper snapback if this resistance here at just above 80 pence is broken over the next couple of days in a quick fashion. Next up, which is a stock which has been in the wars over recent weeks and months. From my point of view, it's never really broken back below 40 pence, or actually even below 20 pence, which was the former April support zone. But Hurricane Energy obviously dragged down even lower than that. A possibility of an intermediate rebound here towards the 19 pence level within this falling triangle formation that we have here. Decent RSI rebound to start December, so that could be providing some momentum. The ideal scenario is that we don't break back below the latest support area of 15 pence ahead of a rebound back towards the 20-25 pence zone, which would tie in with the present area of the 50-day moving average just above that level. Finishing off with another possible recovery situation, and that's Range Resources. Obviously, the shares hammered after this horrible bull trap at the end of September through 1.5 pence, and then resistance coming in persistently below the 50-day moving average at 0.85 pence. Be cautious on the shares. You'd wait maybe for an end of day close back above the 50-day line, but it does look as though with these multiple RSI rebounds off this October support line, momentum is gathering in a positive way, and that could take the shares back up to the 1 pence zone again over the next 2 to 4 weeks. This stage, only really a sustained price action back below 0.6 pence would be outright negative for Range Resources. That's it from me. More updates on spreadbetmagazine.com.